Welcome to Trading Lounge and the indices, and starting with the SPX here, and we've got two counts. This is the primary count, the first count, so we have wave 1 and 2, and we're looking for a low to be in place, and we're looking for the market to build off from this point. We are seeing some stock, tech stock leading in that particular direction, but it's a little bit hard to confirm at this point. So the other count that we have, the alternative count for the SPX, is this one here, where we look at this wave A here, wave B up there, and wave C to the downside. So in this instance here, this would make this leg down here as wave 1 here, and then going back for wave 2, and then down for 3. So this wave 2 that's in a rally here at the moment, in this one here, we're trying to decipher if it's going to be impulsive or it's going to be corrective. So we just don't quite have enough information at this particular point in time to verify that. But what we can do is we can be tactically cautious and look for either long trades or short trades in this well, I'll call it a T section really, because we've either got to turn left or right, up or down within all of this. So let's go back to the primary count here first, and let's just pick this up here. So in this instance, we're looking at an A wave, a B wave, and a C wave here. And we're looking for that low to be in place with a 5-wave move to the downside. So we know the first little wave ones can be a little bit tricky. I mean, it's nice if you get a nice impulse wave, you can count 5 waves, but sometimes you can get leading diagonals, and you get all sorts of things. So it is a little bit tricky to decipher, but let's go in here and do our best with it. I'll probably spend a little bit more time on the E-mini. So from wave B down here to wave C of wave 2 here, this is what we're looking at here at the moment. So let's just bring in the next degree of structure here. So we've got 1, 2, 3, 4, 5 to the downside here, which is quite nice. And then we're looking for wave 1 and 2 here. The other little box that we've got in here is the the 50-60% retracement level here for this. So so obviously in this different indices look a little bit different. In this case here, it looks like it's got 3 waves to the upside. In the NASDAQ, it looks a little bit clearer in 5 waves to the upside. We have a look at Amazon and Meta and Nvidia and those stocks that are actually creating this here. Looking at those in terms of impulse waves as well. But I think what we should do is be very practical and give both sides of the market a 50-50 chance of being in play. Now, what we want to be doing is, we are basically, everybody is an analyst and everybody is a trader or investor. So putting on your analyst hat or your trading hat is something that you need to sort of flick through a little bit. So if we do have a low in place and the market does move up, it would be nice to be long, so to have an opinion about being long or being short of where you think the market is going can be a little bit dangerous when you lock yourself into your own opinions, because you can make mistakes and miss things and all the rest of it. So when we sort of get a bit surgical about it, what we're really looking for is a trade setup, be it short or be it long, and forget about the opinions, So in this instance here, let's just assume that we've got 5 waves up here. We've got like a little ABC to come back here. And then what we would want to help confirm it again here is that, yes, we could just go long across the top there. That should do the trick. But what we want to do here is we want to allow this to land here now, and then look for 5 waves to the upside. Now, when it does come to the upside, it's likely to, be sold off at the top here. As this top here coming to this supply over here, it's pushed it back down. And this is really a bit of a battle at the 6,000 area here. So this level here, the 6,000. So really what you want to be looking for on the 6,000 a little bit later down the track is this particular pattern here. So if that's the 6,000, we're looking for the arrival, the reaction, the first high above the level. That's what we're looking for, but we can refine it by looking for this high over here. We'll have this high, and that high at the 6,000. So once it's done this particular dance at the 6,000, then you can look to go long, starting at the top, entry here, or entry here. There can be another pattern, but this is the most common pattern. This is the second most common pattern. And it doesn't really matter because you've still got the top where you can go long on. Once you've got that top in there, and you'll only know where it is when it drops, there's certain price points that it can, turn at. There, the strongest number is 1, then 5, and then 8. So it could be, 10 or 80 or something of that nature. And then the third pattern is this one here, where it doesn't stop at the level but still creates a high over here. And then the distance above is the distance below that it goes to, but you have to allow it to play out. But you do that just by following the tops all the time, and then you get triggered in. So that's what you really need to be looking for at the 6,000 if we're going to be on the long side. Will it go to the upside? Who knows? But we're looking for a trade setup, and that would be our trade setup to the upside. If we were looking to the downside, of course, then we do have this 5 waves down here. So this would be wave 1 at this point. So if we go back to our I'll just explain all the practicalities here before we go over to the other side here. So in this alternative count to the downside here, we're having the B wave here, and then we would have the C wave down here further. Okay, a little bit messy there. In fact, that'll be all right on the daily chart. So what I might do here is just put it, I should have done it the other way around. In fact, I'll do that. Sorry about that. I lost the plot there for a moment. So in this case, we're looking for 1, 2, 3, 4, 5 to the downside. And we're looking for an A and a B to the upside there. And I'll just put this on 5 minutes so it looks a little bit more cohesive there. And we'll look for that, to put that in there. And this would work up here as an A wave, a B wave, and a C wave at this point. So normally we would look to go long starting at the low down here. That would be the first step, and then what we would try to do is to try to bring that up onto the second step here. But we have to be careful because we've also got a long trade possibility happening as well. This could all be up for wave 1, and I'll explain that a little bit later. But if we just take this here, a lot of people look for the 50% or the 61.8%, and some people look for what they call the little pocket here in the US. I think they call it pocket, but not sure what it's got a name in Australia, but basically the 62 to 65%. I kind of like that a little bit. The futures market will be looking at this gap here by the buy as well. So that means that it would be a little bit dangerous to put that entry here. Right, but the other thing too is, if it was going to be on the short side here, let's just assume that, we get 1 here and that's 2 here. We'll look at this in a moment. We get 3, 4, 5 here. Then there's going to be an ABC pattern here as well here before it goes down. Then there'll be wave 1 and 2 here, and then it'll move down. And what it will do, it'll retest this support that's being played out here. So in that case, what you can do to be safe is to look for the retest on this one to fail. Now that's a little bit further down, and this little move up through here, the retest here, that will also be in 3 waves as well. So you can also bring that up to the B wave there. You could also do it over to here as well, but you just got to realize that you might get 5 waves up here in that bullish spin to the upside. So you just need to be a bit careful about that. So as you can see, I really need one more session to be able to really sort of figure this out a little bit in here for this. What I would like to do now is just go to the E-minis here. So I'll just put this back on the 15-minute chart, and we'll go to the futures market here. I won't go to the SPI because it's the same as the SPX I've just been talking about, and I don't want you falling asleep. So in this instance here, this is a slightly different count as well here. In this instance here for the E-minis here, I'm just going to lay this out a little bit differently here. That must be on the 1 minute chart, so I'll just remove that. So this was another sort of count that we're looking to the upside as well here, and I just thought I needed to point this out a little bit on the futures market because of the extra after the curb trading, after hours trading, we can end up with a few extra waves and patterns and so on. And I understand that this here, I've got it as down as 1, 2, 3, 4, 5. I also can see that it could be counted differently as well. I can also see that it could be counted with a low in place here, and I can also see that it needs to come down a little bit further as well here. So in this instance here, we could look at this coming down at this point here and coming down and being in this space here for this. So this is something else that we need to watch out for. But our main sort of focus today really is just pointing out that there is a possibility based on stock, and you can watch our stock video for that with Meta and Nvidia and all of those guys, that we can go long above there. So we need to prepare for that. So in a bear market, we're prepared to go long, and vice versa. Always the sort of opposite. One of the things that you can take away here is that, you know, there's a beginning of a trend where you got your ones and twos, and then you got the middle of the trend here where it really sort of moves along. And from this point here, the market has moved down quite slowly from this point, and this is our biggest kickback at this stage. So you have to be very careful about going shorting in this particular space here because the market structure, the personality of the structure here is telling you that there is support coming into the market. Now this support can be illusionary and it can just be sort of short covering and all the rest of it, but just need to be a bit mindful. It means that any short trade you put on should be smaller positions anyway. So then we come over to the NASDAQ. Okay, so this is the NDX here, and the triple Q will be the same, and we'll also look at the futures market as well. So what I'm going to do here is I'm going to look at the NDX here being bullish, and we've got wave B up here down to wave C here for wave 2. So we've got the ABC pattern here for that, and we're going to be looking at this being bullish at this point. So we're going to just bring in the next wave count here, which will be 1, 2, 3, 4, 5 here, and then looking at this as wave 1 and 2 here. Now once again, this particular count that we've got here may play out, it may not play out. So this is what we need to work through. But all in all, if this is going to be bullish, then at the first instance, we need to be long above that point there. Okay, now we're going to see if we can improve on that. So we're going to go from the 15-minute down to 5 minutes here, and we're going to have a bit of a look at this. Now I know it's difficult to sort of imagine being bullish in this because we're in a bear market. We can see that we've got, you know, there's like 3 waves in this particular point here, and so on, but we need to be looking at both sides. So this would be the count here for the bullish count, which would be 1, 2 and 5, 1, 2, 3, 4, 5 up here for the third, fourth, 1, 2, 3, 4, 5. So it is doable. And then we come over to here for this. So on this one over here, and this is the little gap here, and this is which will be important for the futures market, and this will be the 62 to 65%. So we're kind of where we need to be in all of this. And also to remember too that wave 2s are normally swift and sharp. You know, so we're kind of seeing all the things that we need to see in this move here. So I'm just going to bring this down to the 1 minute chart now that you're on the page here. So we've got this wave 1 up here. We're looking for just bring this across over to here, and this one here I can just tune because it's tuned into the 5 minute chart. And then we can just bring this down here. So we're looking at 1 and 2 here, and 3, 4, 5 here. So I can see that in this last little leg here that I could get one more little move in here. But wherever the futures market ends up and the curb trading on the stocks, the extended hours on the stocks end up, well then this is going to bump in a particular direction, you know. And then here, so we can count this down as the A wave here, the B wave here, and the C wave here. It's not to say that it's true and that is that, but what we want to be looking at is that if we take this high here, and I'll just put it on the 62% here, so then we know that this this to the upside here, this 50%, I'll just take it to the 65 and the 50% here. So that's basically any move to the up. If it was going to be bearish, it will go up and hit that box and drop from there. And even if it was bearish, it doesn't even have to get to the box here. It could be shorter than that. But the interesting thing is that if it sits on top of the box there, eventually finds support on the box, then you would have to start thinking that it's didn't mean to do that, got the wrong one. Then you'd have to start to think that it's bullish at that time, you know. Just bear with me a second while I just repair the damage. Yeah, so we could say that if you see the market above this box here or finding support here, then you know that you need to be bullish at that point. And what I normally find is that one of the other things that you can look for from the low, losing the plot this morning. One of the things that we can look for here is normally we either see three waves to the 61.8%, and then we'll be coming down at that point. So you can either look for see if you see three waves, or if you see five waves to the 61.8%. Because if you see five waves here, in both cases, it's going to have some sort of rejection here. But if you can count five waves, well, then you're left with the B wave at this point. And I am sort of, looking at the long side here, because that trade will likely come first at this point. So that would be the entry at this point. If you can't see five waves there, then you have to gravitate over to the closest largest number, which will probably be 21,250 at this point, the 5 there, the midpoint, and look for a tested support on top of that. So anyway, like I said yesterday, we were waiting for the move up to complete, and then we needed to move down, and then we need the next impulse wave. So the puzzle is starting to come together. It's just that I can't confirm it at this point. The move up here in stocks, if you look at the stocks video, is quite positive actually. So I'm kind of on the positive side, but I just can't confirm it. We're just not there just yet with this. Then if we come over to, I won't do the triple Q, but I'll come to the futures here, and I'm on the 1 minute chart. I might just stay here. So the futures chart here, I want to look at it like the futures market on the E-minis here, where we still got to come down a little bit further here. So the first thing here is that if I'm totally wrong, then we can go long above that top there. And we talked about going long in terms of getting a 5 wave off the low here, and then the ABC, then you can bring that down and put it on top of the B wave. But if we're looking at the short side here, then the next step in the sequence is looking at wave 3 here with wave 4 here, and looking at this as a corrective wave here, and then 5 waves down at this point. So in this case, we'll just call this 5 waves here and look for a little ABC pattern here. And in this case here, we can look at this being from this low here as 1 and 2 here, and then this would be wave 3 here and 4 to come in play, not quite there yet, and 5 here. So, and then we would come down as 1 here, and then there would be a little ABC pattern, and then we would come down here again at that point. So in this case, the short trade would be under here, but you need this little move up here to complete itself first. So if we look at this as 1, 2, 3, 4, 5 here for 1 and 2, and the third wave up here, which I think the third wave just needs a little bit more, and then the fourth and the fifth. I could squeeze it up and go 1, 2, 3, 4, 5, but it's such a nice little third wave, third of the third in the middle here. So once again, anything sitting above this level up here, and then it would be bullish at that point. So I'm just pointing out both sides of it at the moment. So let's just see how this plays out. So in this case with the futures market here, just on the 1 minute chart from the previous top over there. We can just drop this into 5 minutes or 15 minutes here to look at this. I don't know where that spike in the data came from, but so from the B wave up here, we're looking for 1 and 2 down here, and all the way down for the third wave, the fourth wave, and then one more little move down here for the fifth wave here. Now this could be the low of wave 2, or it could be wave 1, so we'll have to rework it from that point. Okay, so let's go over and have a look at the DAX. So with the DAX, we're going to look at 2 counts as well here. Okay, so it's not that we're going to miss much either on all of this. So the situation here is that we've got wave 3 over here. We can view this as the A, the B, and the C here for wave 4. We can view this as 1 and 2 here, and then 1 and 2, and then 5 waves up for 3, 4, and 5 here for this. And then we'd be looking at this here as, this wave 4 may get a bit more complicated. It may end up coming down here first, but we still need that wave 5 up here. Wave 5, then wave 4, and then wave 5 up here. And, you know, the thing is here is that there will be, you know, coming into this old high over here, it's going to make that a bit messy at this top here. But we would need this structure here. We would need wave 4 and wave 5 here of wave 3 here, and then 4 and then 5 to finish. So that would be the bullish move. If this is true, then we still need to just allow this wave 1 to play out here. You're not good. If you're long already, then you should be taking sort of money off the table at this old high over here. I wouldn't go long over here because you're just going to hit the 23 here, or very close to it, the 23,000, and then we're going to pull back from that point. Right, so this is one count. Now I'm going to have another look at another count where we've got this wave 4 here still sitting over here, because if the S&P goes down and the NASDAQ go down, then this will have to come down to complete that wave 4. So we're going to look at the alternative pattern here on the DAX, and which would be this one here. Let me just get this in. So in this instance here, we would look at this still as the A wave here, then an A and a B and a C wave up here. And then this move here would be from this point here would be wave 1 here, wave 2 here, wave 3 here. I don't know how complicated wave 4 is going to get, so I'll just put it here, and then wave 5 up here. So in this instance here, we get a nice A, B, and C pattern here, and then we come down for wave C or 4. So I don't know which one is which, so that means that we can't go long here. We don't want to go long into the old top. If it is going to be bullish, then we're going to get a classic trading levels pattern on top of the 23,000 here, which is actually the top of minor group 1, and that will be quite sort of powerful. And in that way, we would have a classic trading levels pattern here. We'll have a bigger one, which would be the arrival here at the level, the reaction, and then 5 waves up here for the first high above the level for wave 1, and then an ABC back for wave 2, and then we'll go up again. So but we're not there yet. We're not in that position to go long at this point. Like I say, if you're long already, then you need to be sort of scaling out at this particular point. So they're the 2 counts for this market, depending on what the rest of the world does at this point. So now I'll have a look at the FTSE. So from following on from yesterday, we've got this top over here at 8,800, always call 8 a profit-taking number, and we've just been working through this correction here as a wave 4. So this, let me just tag that in there, right? There we go. So from this wave 3 up here, we're looking for wave 4. Now we could do this as an ABC here and have this wave 4 here, this wave 4 sitting over here for this. That's quite possible. Or we'll need to bring it over here. I'm not quite sure at the moment. Now this is where we got to kind of start being a bit sort of cautious. So at this point here, we know that we're in the we're in the zone here, that 50-60% retracement level here. I don't see 5 waves up here. I see an A and a B and a C at this point, so I'm not getting those 5 waves there. So that sort of straight away tells me that this is likely to be corrective at this point, and if that is the case, then we'd be looking at wave 2 here. 3 will come down to the old lows over here somewhere, 4 and 5 here, and then we can go up from that point. And this would make if I can let go of it, this would make sense in terms of what we're seeing on the futures market for the S&P and for the NASDAQ at this stage. So I'll leave it there at this. If this market pushes up higher through this 61.8%, then we'll look at a way to get in at that at the next setup at this point. But we're in the midst of this wave 4 here, so we just need to be a little bit mindful how this plays out here. Okay, so let's have a look at the Australian market. Okay, so the Australian market, we're looking, this top here is a wave 3 up this top here, and we're looking for a move to the downside as an A and a B and a C. Now, as I mentioned yesterday, I could easily look at this as wave 1 and 2 here and look at a bit more of a bearish picture to the upside, to the downside. So I don't need to go there yet because I'm still working with the bullish count for the S&P and the NASDAQ and all the tech stocks and all the rest of it. So I kind of want to stay with, find the best looking corrective pattern that I can. So that's what I've been doing, and then I'll continue to do that until proven otherwise. So that's what I'm doing now. So in this instance here, we had wave 3 here yesterday and wave 4. We had this sort of move down here, and I can see that we can squeeze 5 waves out of it. So I could put this down here as the low in place for this, and that would be the end of it, because we've made a new low below wave 3 here. So I could do that. I could also look at this coming down further here and then look for 5 waves down here. So I could probably put this wave 4 over here for this as well, but it didn't really come up that high there. So I'm sort of more inclined to look at this as wave 1 and 2 here, and 3, 4, 5 to come down here a little bit further at this stage. So that's what I think this is at the moment. And yeah, so we still got more to come down at this stage, a fair bit really when you think about it. So we'll see how it goes. So we can have a low in place. So if I'm wrong, and we're going to go long, because we can see that all this price action here, this sharp move up here, we can see that the market's slowing down from this trend. It's slowing down. But what we do need to see is could I look at this as being an impulse wave? Yeah, possibly, and some sort of little ABC here and a push up. I could do that. But what I would like to do is use the trading levels, because this is the top of group 1 here. And like I mentioned yesterday, we've got 8,000 here, which is a major level, then 1, 2, and 3 that make up minor group 1. If we get support on minor group 1 here, then we can look to go long. If the number 2 here, in a downtrend, if the number 2 here becomes a retested resistance here, if this is the 8,200 here, becomes a retested resistance by taking out the first low that comes through and goes back and retests. If it takes that low out here, then it's going to be pulled down lower. It's going to be pulled down to 8,000. This can also get a little bit more complicated as well. It could be like this. This is the 8.2 here, where it comes down here and then goes back up above the level and then comes down at that point. So there's a couple of ways for it to play out. We've had that first spike down here. And yeah, let's just see how that goes. But if we're going to be bullish, what we need to see is the arrival, the reaction, the first high above the level, some sort of little ABC, and then we can go up from that point. And then we can just look to go long above that along that B wave there. But otherwise, everything sort of said and done, we'll be looking for a move down here for this to play out here. that can obviously come down here further and all that sort of stuff. But yeah, and like I said before, this, I'm trying to find a low and a move up. That's what I'm looking for. Now, if we see that the S&P 500 is actually bearish, then we'll be looking at a bigger picture here for this market. Then we will be looking at all of this here as just an A wave and then a B wave and then a C wave to come down further. So that means that in that instance, just to give you an idea, this leg that's coming down here at the moment, we're looking at this being corrective and then moving up, and we're looking at it being this particular pattern here. So we're looking for that low to come in and then a move up from that point. But if that doesn't play out and this becomes the case, then we'll have to look at this as some sort of A, B, and C down here, while the S&P 500 goes down for wave C of 4. Look at that. So this is the S&P here. This would be the bearish count that we talked about. So all of this would be down for wave 1 here, and going back for wave 2 here. And then just moving up further on down at that point, so we can look at it like this here. So if we get this particular pattern here, then obviously the Australian market will be coming down further as well at that point. So we'll look for that ABC, and then all of this pattern here becomes an expanded flat correction here. So expanded flat correction here, if that's the case, right? So we'll just see. We just need, as I mentioned, when we could identify, when we had this move here coming down, we identified that that we need to wait for the 5 waves to complete, and then we need to wait for a rally to try to figure out if we're going to be looking at an impulse wave to the upside or a corrective wave to the upside. And it's just going to take time to do that. And yeah, so we just need, at least another session to figure out what's going to be the case with all of these. So yeah, so today's sort of Thursday in Australia here, so we need Thursday to play out, and hopefully at the end of Thursday, by the US session, or maybe even the Asian session, or the European session, or the American session, one way or another, we're going to be able to understand where we need to be in the market on the long side or the short side. Alrighty, thanks for tuning in. Cheers.